We are watching closely the Bank of Canada today as it is expected to announce the largest rate hike in 20 years. So what does this mean for your mortgage or if you're looking to get one? And how will it affect the housing market? We've brought back real estate expert David Fleming to sort through that with us. David, lots of people anxious about this number today. All 6 big banks in Canada projecting a rate hike of 50 basis points. So what does that mean for the average homeowner or somebody who's looking to get into the market?
Well, if we have to remember that if the overnight lending rate goes up 50 basis points, it doesn't automatically mean that your mortgage rate is going to go up. So for people that are already in fixed rates, it doesn't affect them. It'll affect them when they renew. But the variable rate is tied to the overnight lending rate. The 5-year fixed rate is not. That's tied to the bond market. And anybody in finance can tell you the bond market's been quite erratic this year. And we're seeing movement in the 5-year fixed rate, honestly, every week, it seems. So long story short, if we see a 50 basis point increase, which we are 99% going to, the variable rate is going to go up probably a corresponding 50 basis points, and the fixed rate will remain the same, but there's certainly upward momentum on all rates as we go through the end of the year.
Yeah, let's talk about how this affects housing. Housing prices, as we know, doubled the last 2 years. There were bidding wars, homes going for hundreds of thousands of dollars over asking. That's become commonplace. Realtors and economists are starting, however, to see a shift. What are you noticing?
I mean, I'm seeing, and again, I work in the central core of Toronto, so it's not representative of the whole country. I'm seeing stability. I'm seeing a move towards a more balanced market. So if purchasing power decreases, and that's what we're talking about with an increase in rates, is purchasing power decreasing. If somebody who could have afforded $900,000, all of a sudden their rates go up and they can afford $870,000, how much does that move the needle? Is everybody buying to their absolute max? Not necessarily, but in theory, this rate increase should have at least a minor effect on all markets.
I feel like I've been asking this question for the last 2 decades, but I'm going to ask it anyway. Are we in a housing bubble, and is it finally bursting?
I'm like you, Anne-Marie. I've been doing this for 18 years. I got into the business in 2003. And people were saying the market's going to crash. And look what's happened since then. So are we in a bubble? I don't think so. I do think after seeing GTA prices rise 15% from December to February, if we see the average home price in April into May into June go down a corresponding 8%, the bears are going to cheer that. They're going to say, see, I told you so. But we're really just retreating to November prices of last year. So I don't think that's going to happen. But if we see another 50 basis points increase in the rate in, say, August or September, sure, absolutely, that could happen.
If we're going back in the calendar, let's go back to that May when housing prices just spiked because people have emotional reaction when it comes to buying things. They feel like they don't want to miss out. Are you expecting a busier or a cooler spring-summer period?
Well, what we're seeing right now is a rush to purchase because everybody that has a rate hold needs to jump in. And so I did an interesting deal a couple of weeks ago where the sellers wanted a June closing because they wanted their kids to finish the school year. The buyer demanded a May closing because they have a rate hold that is a full % lower than what rates were going to be. And in fact, next month, they'll be even higher. So one party had to lose in theory, but of course, we sold the property the May closing and my clients were able to lease back the property. So everybody won. So you're going to see a lot of people rushing to the market right now to take advantage of their rate holds. And then as we move into the spring, I think this is going to be more like 2017, where we saw a front-loaded year. Prices went nuts Jan, Feb, March, and into April, and then things cooled a little bit. Inventory will spike, as it always does, in April, May, June. A lot of buyers have already bought. People are getting ready for the summer, and I think we're going to see a very balanced market as we get into the end of spring.
David, this is why I love our chats, because you always put into context what it's going to look like on the open house websites and on the streets of our neighborhoods when we take a look at those numbers from today. Thanks so much.
Thanks for having me, Anne-Marie. Have a good day.